yesterday, and that people not as voracious at the beginning, that people just want to believe. And there's a bias to up in this market, in part because the interest rates are coming down, but also in part because people believe that the Fed is near done. I question that. I think the Fed will not be near done until we see wage growth decline. And that's not yet.
Yeah, I feel like usually on days of big Fed meetings, markets were a little bit more closer to the flat line. Today, we're seeing a nice rally.
You're right. Well, remember, I think we're in a seasonally strong period, and tomorrow we'll come in, and I'll be like, okay, well, the Fed is done. Now what's in front of us? And the answer is Santa. Make Santa, SNTA.
Yeah. So we got the Fed meeting. We got the announcement at 2:00. The presser at 2:30.
Right.
50 base.
Don't do anything on the announcement.
Right. The moves usually the first two moves are wrong. It'll move in one direction, quickly flip. There's a lot of digesting happening. 50 basis points largely expected, but now after yesterday's cooler print, people are thinking 25 in Feb. But what's interesting about the December meeting is we should get updated dot plot projections today, economic projections, and maybe those dot plots do get overinterpolated, but it should provide some clues into how the Fed is thinking about monetary policy next year.
Look, I think the Fed is going to say, we haven't seen it yet. There's some encouraging signs from some CPI, but we are still in a market where labor is tough. It's hard to find employees. So the wage inflation spiral is going to continue. That's what we have to break. That's unhealthy. So until we get that broken, I don't think there should be an all clear.
Yeah, and the two debates right now are how high will the Fed go? How high will they take rates? The terminal rate is the phrase often used. And how long will they keep it there? Some think that they'll hold it throughout 2023. Right. Others think if economic data weakens, perhaps they start cutting next year.
Look, I think the key number is this. This is where you get a 2-year. Okay, so it was at 4.6. At 4.6, everyone thought it's going to 5. Okay, at 4.13, everyone thinks it goes to 4. James Gorman said it was going to go to 4.
Yeah,
there is a huge difference between like Moses Malone.
Right, 4% unemployment, 4%.
There's a huge difference between 4 and 5.
Yeah,
and I want to point out that between 4 and 5, when you get to 5, there's almost no stock you can buy. This is good as the Treasury. I mean, unless you're very young, you can afford to lose as much as you want. So anyway, let's be aware that you can't take any action until you hear the speech. And if you do feel so inclined to take action, we will have a name.
Yeah, we are looking, we got a lot of cash to make a little small trim of Procter yesterday after it had a nice
move. That was just,
back to 150.
Procter's move. I don't know if we have Procter's move, but it's like, this is the kind of thing. This is the kind of thing that we're made to do, okay? This says it's going to go higher.
Yeah.
But greed, if you remember back to NVIDIA and AMD, greed said that you've got to trim something.
Yeah.
So we trim even though we know that it would be going higher, because a lot of what's going on right with Procter is the dollar needs to go down. That's happening. The raw cost of surfactant, of plastic and paper have to come down. That's happening. Their supply chain problems are getting fixed. That's happening. So the stock's going higher, as it should. But that doesn't mean we should be greedy.
Right. And it's still a 4% position, so still like it for the reasons you called out. Another stock, we've liked this stock all year. Danaher, coverage initiated at Deutsche Bank. Big price target, 310. They're still bullish on bioprocessing. Something.
Just let me talk to you quickly about some of the stock that was just talked about. Procter & Gamble, just before they got into Danaher, and we know Danaher is a good company. That's a healthcare company. Anyway, guys, if you're not joining my Patreon, you're really missing out, because the investment club did buy a new stock yesterday. So, guys, if you're in my Patreon, please remember to look at your emails. And thank you for the guy that sent out a message and asked me for the list of stock. I check your Patreon. I just send you a list of stock. But let's go back to the CNBC Investment Club, and let me talk about Procter & Gamble, which is a real good company. A month ago, it was in the 130s. Now it's in the 150s. And as Jim is saying, sometimes you have to trim some stuff, because if it falls, then you have no profit. So sometimes we just have to peel out some profit at the top. Anyway, guys, let me go back to Jim Cramer and Jeff Marks as they talk about another stock, which is Danaher. So let me hear what Jim Cramer has to say about Danaher right now.
2023,
I was surprised.
there's going to be some inventory digestion, but they still like it. And of course, this is a company that is really changing its stripes. It has that spin-off happening, separation sometime in the fourth quarter of next year.
And we have definitive evidence that when they do the separations, the stock does go up. So right now people are saying, I don't know, I'm worried about PCR stuff. Well, you should be thinking when they do the split, the stocks have then really had the run. That's how you got the run from 90 to 150. That's how you got the run from 150 to 250. You have to understand this is a company that is constantly taking its lowest margin, lowest PE businesses and getting rid of them. And that raises PE and therefore forces you to buy the stock.
Yep. We love stories of companies that are changing up their stripes, especially during a downturn, reshaping the portfolio, looking for higher growth areas, higher margin areas. And Danaher is a company that does this consistently.
Better than anyone. That's just what they do. Now, one that is not doing it effectively that we're struggling with is Qualcomm. They're trying to change their stripes to being auto, not just telco, because telco's in the doghouse.
Yeah.
Qualcomm recommended again today. This time, JP Morgan reiterates it's overweight. It does say basically it's, I don't know, what do you call it, the best house in bed ever? What would you say?
Yeah, look, they are fans of that diversification strategy, but it's been slower, as you point out. And they're saying they think sentiment could improve next year. Sentiment has been so poor in this stock as the smartphone market stabilizes, which they're hoping for. It's going through a period of digestion right now. Everyone overshipped. Cell phone sales
Inventory
slowed down.
No, I mean.
So it is a very cheap stock.
But
I know we
sold
recently trimmed some around 120.
Yeah, I mean, look, it turned out that that was just a different era. I mean, we talk about this all the time. It was a different era. You could buy a stock like Qualcomm. Cristiano Monk could come on and say, "Listen, we just won a big Chrysler contract," and the stock would go up 20.
Right.
We don't have that era anymore.
Yeah, you're right. To that point, that design pipeline in their auto business is huge. But there's just too much focus on smartphones.
All right, guys. As you guys know, things are down this morning in the stock market. Qualcomm, I'm not too sure about that, but I still say STZ, Constellation Brands, guys, should consider buying Constellation Brands. As Jim always say, people continue to drink beer in a recession. I don't know if it's frustration, but beer prices keep doing very, very well. Constellation, guys, I'm knocking the table on Constellation, STZ. It's at 235 when I checked this morning. If you're watching the video, look at your portfolio. Consider adding STZ Constellation brand to your portfolio. Let me just get back to Jim Cramer and Jeff Marks of the CNBC Investment Club, guys, and then we will close off in a minute or so. Let's get back to the club meeting, guys, and hear what they got to say.
The bulk of their business. And then, catching up from something we talked about yesterday, Eli Lilly held its 2023 guidance call. The stock fell, I want to say around 2% yesterday, but we did have some analysts raise their price targets, including JP Morgan, who increased to 400 from 380.
Yeah. Now, what we have here is a drug that you can take a pill and lose 15 to 20% of your weight. Take the injection, lose 25. I'm going to be in line to take it, and I am very excited because I looked into the other methods, and they're very, very horrible.
So that's the key thing, right? The stock fell yesterday because their earnings guide for 23 was lower than expected. But if you look at the reasons why, it's not because of bad product performance. In fact, revenue was stronger than expected. But as it turns out, they're investing heavily in some phase 3 trials, including one which would be an oral pill for diabetes and weight loss as well, and which could be huge.
Right, and they're also trying to come up with formulations. There are a lot of drugs that gain weight when you take them, and they want to use this maybe as a part of a pill that would make it so that you don't gain weight, that would suppress your appetite. I think it's a very, very strong story. I like it.
Anyway, guys, welcome back, guys. As we can see, this stock continued to do very well. That's Lilly. If you're not in it, I wouldn't advise you to buy it. If it's up, you got to wait for a pullback. So look at your stock portfolio. If Lilly is in a pullback, do consider adding Lilly to your portfolio. Anyway, guys, I want to thank you guys. I love the support. I love the comment. I want to thank you for all you do. I want to thank you for liking the video. I want to thank you for subscribing the video. And hopefully in 2023, we'll continue to give you more content as to which stock you should buy. Guys, in the next month, I will have a new book coming out on stock investing, which is going to talk about stock investment in 2023. The guys in my Patreon will definitely get that book free once it comes out. Anyway, guys, thank you for watching the video. Don't forget to comment and subscribe, and consider joining the Patreon, guys. This is not a sale call. There is so much information out there. Trust me, if you try Patreon, you're going to love it. Anyway, guys, thank you for watching the video. Don't forget to comment and subscribe.